So, you know how the whole world is on this massive hunt for clean, reliable energy? Well, it turns out, hidden inside a pretty standard corporate financial report, there might be one of the biggest clues yet about where energy future is headed. We're going to break down what this report from a company called Cameco is telling us about the potential comeback of a real energy heavyweight, nuclear power.
That is a pretty bold statement from the CEO, Tim Gitzel. He's not just saying, hey, our company's doing well. He's claiming they are literally leading a worldwide revival of nuclear power. And that really sets the tone for everything we're about to unpack. Is this just corporate hype, or is there something real happening under the surface?
And I love this because the CEO himself basically admits that talk is cheap. A good narrative won't turn a turbine. It's a great line, right? It means a good story doesn't actually generate any electricity. So to figure out if this nuclear resurgence is for real, we have to look past the talk and dig into the cold, hard data, which leads to the real question. Do the numbers actually back this up?
And that brings us right to our first stop, the financial checkup. Because let's be honest, the ultimate test for any big idea, any grand strategy, is whether it's actually making money. So let's see if this nuclear resurgence is showing up where it counts. On the balance sheet.
Okay, here is our first big number. In just the first 9 months of the year, this company posted an adjusted EBITDA of $1.3 billion. Now, if you're not deep into financial jargon, EBITDA is basically just a really clean way to measure a company's operating profit. It cuts out all the noise from taxes and interest. It gives us a pure look at their performance. And yeah, $1.3 billion is a very healthy number.
But here's where it gets really interesting. A big number is one thing, but check out the trend. That $1.3 billion is up from just $1 billion during the same time last year. That is a 33% jump in a single year. This isn't just a company that's profitable. It's a company whose profits are accelerating, fast. That's a huge signal that something fundamental is changing in their market. And this table tells us exactly where that rocket fuel is coming from. You can see their main uranium business is up a solid 9%. That's good. But look down a bit. Their fuel services division is up 63%. And then there's Westinghouse, the part that builds and services the actual reactors, up a staggering 78%. What this tells us is that the momentum isn't just in the fuel, it's in the entire nuclear ecosystem. So, the money side of things looks incredibly strong. But you know, it's never a perfectly smooth ride. The company recently hit a snag with some production delays at one of their major mines. So, let's take a look at these supply challenges, because this is where a company's strategy really gets put to the test. So here's the puzzle. On one hand, you have a pretty big problem. A major production forecast gets slashed. On the other hand, the company is saying, don't worry, we're still 100% confident we'll meet all our customer orders. So, how is that even possible? How can you produce less of something but still deliver the same amount? Well, the answer is all in the strategy. It all comes down to this really smart, multi-pronged approach. They don't just depend on what they dig out of the ground today. Think of it like they have 4 different levers they can pull. There's their own production, of course, but they also have stockpiled inventory. They can borrow uranium through what are called product loans, and if needed, they can just go buy it on the open market. So when one lever, production, gets a little stuck, they just pull another one to fill the gap. It's what makes them so resilient. Now, that financial performance and that flexible strategy, it's all very impressive. But believe it or not, that wasn't the biggest piece of news in this report. Not even close. The real headline, the potential game changer for the entire industry, was something else entirely. That's right. For a company famous for one thing, uranium mining, the most transformational news in their report had nothing to do with digging stuff out of the earth. It was about building something new. $80 billion. Let that number sink in for a second. This is the potential investment value tied to a new strategic partnership to build new nuclear reactors in the United States. A number this huge isn't just an investment plan. It's a massive statement of intent that could reshape the entire energy landscape. So, what is this partnership all about? Well, it means the U.S. government is stepping in to help arrange the financing for these massive reactor projects. It also means they're going to help fast-track the permitting and approval process, which is notoriously slow. This is absolutely huge. For decades, the 2 biggest things holding back new nuclear plants have been the astronomical costs and the endless red tape. This partnership tackles both of those problems head-on, all in the name of energy security. Okay, so let's zoom out and connect all these dots. We've got incredibly strong financials, a really resilient strategy, and now a massive new government partnership. So what does this one company's report signal for the rest of the energy world? Why does this matter?
This is why we're calling this report a bellwether. A bellwether is just something that indicates where a trend is heading. It's like the lead sheep with a bell around its neck. Where it goes, the rest of the flock often follows. The performance and the deals happening inside this one company are acting as a powerful predictor for the future of the entire nuclear industry.
So what's the ultimate takeaway from all this? Well, what we're seeing is way more than just a good quarter for one company. The data is pointing to nuclear energy gaining serious financial backing and, just as important, serious political will. The conversation is shifting from just supplying existing reactors to actively building new ones. This report is a really clear signal that nuclear is being positioned as a core pillar of a clean energy future. And that leaves us with the big question. For years, nuclear power has been both incredibly powerful and incredibly controversial. But with this kind of financial momentum and this kind of government muscle getting behind it, are we watching the exact moment it finally breaks through and becomes a mainstream solution in our global search for clean, reliable power? This report suggests the answer might just be yes.
Welcome back to the Deep Dive. So, if you've been tracking the global energy transition, you probably know the nuclear industry. Well, it's no longer just a niche commodity story.
Not at all. It's really at the center of this huge strategic and geopolitical shift.
Exactly. And today, we're diving deep into that global nuclear resurgence, but we're doing it through the lens of one of the major players, Cameco.
That's right. The sources today take us right into their Q3 2025 results and, maybe more importantly, the huge strategic announcements that came out right after the quarter closed.
And what we really have here is a roadmap, isn't it? It's a company trying to manage these really complex operational realities.
The day-to-day grit of mining.
Right, the grit of mining, while at the same time securing decades of just transformative, multi-billion-dollar growth.
It's a fascinating tension.
It really is. So our mission today is to give you that essential understanding of the tension. I mean, how does a company pivot from, production shortfalls to becoming the cornerstone of an $80 billion U.S. government-backed plan?
And we're going to do that by extracting those strategic nuggets from the financial data and their forward-looking commentary. It really shows you why nuclear fuel has become arguably the most critical energy supply story right now.
So where do we start, I guess, with the overall sentiment?
I think so. The CEO, Tim Gitzel, he points to what he calls tremendous positive momentum. And you have to understand, this isn't just market hype.
Right.
This speaks to a fundamental change.
Yeah.
Governments, major utilities, they're moving away from just, managing old assets. They are actively funding and building new ones. They're committing to a path of what the company calls robust expansion.
And that institutional commitment, that really gives us the single biggest headline, a deal that just redefines the scale of modern energy projects.
Announced right on the heels of the quarter, yeah.
We're talking about the transformative partnership. It involves Cameco, Brookfield Asset Management, and crucially, the U.S. government.
The U.S. government's role here it's the critical element. This is not just some corporate M&A.
Yeah.
The source really emphasizes that the U.S. will actively arrange financing and facilitate all the necessary permitting and approvals for new Westinghouse nuclear reactors in the U.S.
That's government-level intervention. This is about energy security. It's about industrial rebuilding.
Absolutely. And when you look at the scale of this commitment, it really makes you pause.
It does. The aggregate investment value of this program is stated as at least $80 billion US dollars.
It's just a staggering figure.
It's hard to even grasp in isolation. I mean, we are talking about infrastructure spending that rivals major national defense programs.
So what? For you, the listener, it goes straight to the heart of the national interest. This $80 billion commitment, it's explicitly aimed at three things.
Okay.
First, strengthening energy security with reliable baseload power. Second, revitalizing critical, often dormant domestic nuclear supply chains. And third, just accelerating growth for Westinghouse, where Cameco has a 49% stake.
So it solidifies their whole integrated fuel cycle strategy.
Dramatically. I mean, this isn't just a forecast for growth anymore. It's a tangible, multi-decade national project, and they are a central partner.
It effectively de-risks a huge part of their deployment strategy, right? Because it brings in state support for financing and permitting.
which are historically the two biggest hurdles for any nuclear project.
Exactly. It's just hard to overstate the long-term confidence that injects into their business model.
It's a game changer. It moves Westinghouse from being, a potentially volatile asset to a guaranteed infrastructure driver.
Okay, so let's pull back a little from that massive future deal and look at the financial present, because they negotiated that deal from a position of serious financial strength.
Right. The Q3 numbers showed dramatic improvement, especially when you compare the first 9 months of 2025 to 2024. The change is startlingly fast.
It really is the market rebound paying off.
It is. If you look at reported net earnings, they went from $36 million in 2024 to $391 million in 2025.
That's more than a tenfold increase in just the first 9 months.
A tenfold increase. I mean, that kind of swing reflects not just incremental growth, but a strategic shift in market reality.
And if we look at the figures that are designed to show real operational cash generation, adjusted EBITDA, that trend is just as clear.
It is. $1.3 billion in 2025, up significantly from $1 billion the year before. The core business is just generating cash at a much, much greater clip.
And that profitability is coming from pricing power, right?
100%. It's a direct result of pricing power coming back into the market. The sources show the average realized price for U3O8, that's the raw uranium concentrate, was $62.12 US per pound in Q3, a solid increase.
But the real money story here isn't just on the raw mining side. It's the downstream processing.
Oh, absolutely.
The fuel services segment, this average realized price jumped a massive 42% in Q3.
Which just shows you that the demand for that specialized work for converting raw uranium into fuel material is just exploding. This is where that integrated strategy really pays off.
And they're locking this in for the long haul. The sources confirm they're committed to average annual deliveries of over 28 million pounds of U3O8 per year for the next 5 years,
with even higher commitments through 2027. So this isn't just riding the current price wave. They're signing utility contracts that give them massive downside protection and visibility for years.
So on one hand, we have soaring revenues, incredible pricing, future government partnerships locked in. That's the high-flying strategic narrative.
Mm-hmm.
But that financial strength was immediately tested by what was happening underground. And this is where we get to that tension we mentioned at the start, the operational balancing act.
Yes. This is the complexity that comes with operating some of the world's richest, but also most technically challenging uranium mines. The source details these development delays that were announced back in August at their critical McArthur River and Key Lake operations.
A classic mining story, right?
Yeah.
Real-world geology and engineering hurdles.
Exactly. And those hurdles had immediate measurable impacts.
The consolidated production forecast for 2025, it had to be reduced from 18 million pounds down to a new range of only 14 to 15 million pounds.
And that is a significant production shortfall.
It is, which raises the critical question. If you're only producing 14 to 15 million pounds this year, how can you still confidently tell the market you're going to deliver 32 to 34 million pounds?
That's double their expected production. It's a huge gap.
And that's where their operational agility comes into sharp focus. They call it a key advantage, and you can see why. They have multiple levers to pull.
Right. They meet those contractual obligations using a mix of inventory, strategic purchases, and even specialized financial instruments.
And one of the biggest levers was just operational success somewhere else. Their Cigar Lake operation performed extremely well.
Incredibly well. It created an opportunity to potentially produce 19 million pounds of U3O8.
So that incredible output essentially offset up to 1 million pounds of the shortfall from McArthur River and Key Lake.
It did, but that still leaves a pretty significant gap between what they're producing and what they've promised to deliver.
So they had to get really creative with their inventory. And a key insight from the report is how they managed this. They reduced their outlook for market purchases.
Dramatically. From an initial up to 3 million pounds down to up to 1 million pounds.
So how did they manage that? How did they avoid going into the open market?
This is the highly technical but really crucial detail. They utilize standby product loan facilities.
Okay, so think of this. It's not a cash loan.
Not at all. It's a temporary borrowing of finished product from a partner to meet a delivery date. It lets them draw down on product they already own, but maybe need more time to process or ship.
So they can maintain their reputation, meet the contract, but they aren't forced to go out and buy expensive product on the volatile spot market.
Exactly. It's a perfect example of using financial and logistical mastery to solve a physical mining problem.
Which is why their CEO can say they met delivery volumes just as we always have, even with the delays.
And we also got a crucial shipping update from the JV Inkai operation over in Kazakhstan. They're still on track for 8.3 million pounds of production this year.
Right, and the key part is that a shipment carrying both their remaining 2024 share and part of the 2025 share, about 2 million pounds, is expected to arrive in early November.
Which ensures those late-year delivery commitments get met. That supply chain timing is just essential for maintaining customer trust.
Okay, so let's leave the challenges of the mine site and move downstream to the conversion and fabrication side. This is the integrated fuel cycle at work.
Fuel services and Westinghouse. This is where they really differentiate themselves from the pure play miners.
And the fuel services division, that's the part that handles the complex conversion process. It remains steady. Production is expected at 13 to 14 million kilo GU.
Which is the part of the process that turns that raw U3O8 into the necessary compounds for reactor fuel.
And specifically, they're pushing hard to achieve a UF6 production rate of 12,000 tons a year at their Port Hope facility.
And for you, the listener, UF6 is the gaseous form of uranium that's needed for enrichment before it can become fuel rods.
So boosting that capacity is critical because conversion capacity globally is tight. They need that 12,000-ton rate to satisfy their long-term customer commitments.
It's all about securing market share beyond just selling the raw material.
Which brings us to Westinghouse, the crown jewel of their downstream investment. They own 49%.
And financially, Westinghouse is definitely moving in the right direction. They significantly reduced their net loss in Q3. It was down to a $32 million loss for Cameco's share compared to a $57 million loss the year before.
But I think more significantly than the reduced loss, there was a key financial milestone that shows the strategy is finally paying off globally.
Not just in North America. This ties directly into European reactor deployment success.
That's it. In October, Westinghouse received cash for the major construction project for 2 new reactors at the Dukovany power plant in the Czech Republic.
So this isn't some theoretical future money. This is a realized construction milestone payment, cold hard cash.
And because of that payment, a distribution was made to the partners. Cameco received $171.5 million for its share.
And that is a crucial number.
It really is.
Because it proves the investment in Westinghouse is yielding major cash returns, not just from fuel services, but from the successful deployment and installation of nuclear reactors in allied nations.
And if you connect that Dukovany cash distribution, a payout from a European project, with that $80 billion U.S. government partnership for future North American deployment, you see the full global scale of the strategy.
Yes, they aren't just selling uranium anymore. They are participating in the profitability of building the next generation of global baseload power.
They're leveraging all of it. Their integrated fuel cycle, their downstream expertise, they benefit from every single stage, from the mine all the way to the reactor core.
This is truly a story of strategic positioning. They are fundamentally changing their risk profile by becoming a key partner in these major national energy initiatives worldwide.
You know, it has been a monumental quarter. And it gave us 2 deeply interconnected narratives for the industry. First, the immediate vulnerability. Despite the financial boom, the physical constraints of mining are still very real. You see that in the delays at McArthur River and Key Lake.
But the save, as you said, came from their operational flexibility. That unexpected success at Cigar Lake and the really strategic use of those product loans, it ensured all customer commitments were met.
And second, there's the strategic long-term view. The massive partnership secured with Brookfield and the U.S. government. It just solidifies Cameco's position at the forefront of the global nuclear resurgence for decades.
The future for them is now defined by deployment, not just supply.
So what does this all mean for you as you consider the global energy landscape? When governments, especially the U.S. government, are willing to commit massive multi-billion-dollar investments, like that $80 billion figure, specifically to deploy new reactors.
And revitalize supply chains.
It's all explicitly aimed at strengthening energy and national security. So the question for you isn't just about what the future price of uranium is going to be. The question is whether the world is currently entering a new, intensely nationalized era of strategic competition, where carbon-free baseload power is the foundation upon which political and economic power is built.
A provocative thought. If governments are footing the bill for the infrastructure, the economics of power generation fundamentally change. We'll leave you with that until next time for another deep dive.